Good day, investors. On Tuesday, February 3rd, Eastern Time, U.S. stocks closed lower with fluctuations. A strong rebound in the gold market drove precious metal stocks higher, and phased progress in government shutdown negotiations offset the impact of fluctuations in the crude or oil market. Tech stocks showed divergent trends, presenting an overall pattern of weak volatility and structural divergence. As of the close on February 3rd Eastern Time, the Dow Jones Industrial Average dropped 166.67 points, or 0.34%, to settle at 49,240.99. The Nasdaq Composite lost 336.92 points, or 1.43%, to 23,255.19. The S&P 500 fell 58.63 points, or 0.84%, to 6,917.81. Trading was moderate on the day, with capital flowing into the precious metals sector and risk appetite picking up slightly. Sector performance was significantly divergent. Precious metal stocks staged a strong rebound, with Barrick Gold up 2.75%. The memory chip sector weakened, with Micron Technology down 4.19%. Most tech stocks declined, including Apple down 0.20%, Alphabet Class A down 1.16%, and Nvidia down 2.84%, the main drag on the Nasdaq Composite. Oracle fell 3.37%, while Intel rose 0.90%. Energy stocks, however, rose against the trend, with ExxonMobil up 3.85% and Chevron up 2.30%. In addition, the Nasdaq Golden Dragon China Index fell 0.94%. On the macro and commodity market front, according to Sina Finance data, COMEX gold futures for April delivery closed sharply higher as of the close on February 3rd Eastern Time, at $4,970.50 US per ounce, an increase of 6.83%, hitting a recent intraday high, supported by the dissipation of panic after the earlier sharp drop and global central bank gold purchases. Spot gold also moved higher, closing at $2,814.20 US per ounce, an increase of 0.56%. WTI crude oil closed at $63.21 US per barrel, an increase of 1.70%, with stable oil prices supporting the performance of energy stocks. Meanwhile, government shutdown negotiations saw a turning point, with the House of Representatives reaching a temporary funding agreement, significantly easing the short-term shutdown risk. The Federal Reserve made no new policy statements, and market expectations for interest rate cuts within the year remained stable. Looking ahead to Wednesday, February 4th Eastern Time, markets will focus on the vote on the temporary funding agreement, comments from Federal Reserve officials, and commodity market trends, and are likely to maintain a volatile and weak trend. Strategically, it is recommended to focus on the rebound opportunities in the precious metals sector, cautiously deploy tech-leading stocks, pay attention to energy stocks on dips, strictly control positions, and dynamically adjust the portfolio structure following policy and market signals.